Now, the Central Bank of Nigeria's revocation of Heritage Bank's operating license has sent shockwaves throughout the financial industry, leaving depositors, investors and stakeholders wondering about the implications. The CBN cites breaches of financial regulations and poor financial performance as reasons for the revocation. But what does this mean for the bank's customers, employees and the broader financial landscape? Joining me now is Professor UCHE UWALEKE, financial economist and Director, Institute of Capital Market Studies at Nasarawa State University, Kefi, to help us understand the implications of this development and what it means for Nigeria's financial sector. Professor, you're welcome to Business Express.
Thanks so much, Musa. My pleasure indeed.
I think before we start this conversation, it's very important that we have some sort of a kind of background. Let's see this report and to tell you that we've been around this particular issue, I think 3 weeks earlier before it actually happened. Let's see the report.
This morning, I need money. I got to my main branch in Zone 3, Rochas Plaza. I met people there. The branch is shut down. I went to Zone 5 near First Bank. I went there. Security are telling me they are not more operated. I said, why? They said I should come to this shop price. That's why I come down here. I come down here. I meet people not paying. They said the network is shut down.
I'm not giving a concrete reason why the problem is all about. They are telling us that the network is down, and the network has been like this for more than 3 months. It's not going through. You cannot transfer, you cannot withdraw, you cannot use ATM. You cannot get access to your money. When you come to the branch, for you to get cash, they will be giving you PIN.
On Monday, just to transfer 450,000, I couldn't get it. Withdraw money, I couldn't get it. I tried my best to see the manager yesterday. He promised me that my transfer would be done by the end of work yesterday. I've not seen the alert. But within the week, on Monday, a woman came here and was shouting. They were begging her to collect.
Well, Prof, as you can see, well, that's the views of some of the bank customers. That was like 3 weeks before the CBN decided to revoke the license of the bank. What do you make of all this, this recent development by the CBN?
Well, Musa, let me start by saying that the banking sector is a very, very highly sensitive sector, and it is one sector that thrives on public trust, public confidence. So it's important that that trust is maintained at all times. And that is why, in my view, what the central bank has done is in the interest of financial system stability, and is in the overall public interest. So I think it's one move that will engender trust, that will also send the signal out there, especially to the banks, that they must sit up, especially in terms of corporate governance, in terms of eschewing reckless lending, and also playing by the rules. I think that is what this action has one message that the central bank has sent out there.
Okay, how do you think this development will affect depositors and customers of Heritage Bank?
Well, of course, it's in line with the powers of the bank to start with. If you look at the CBN Act of 2007, Section 2 of the Act spells out the objects of the bank. 5 objects are listed under Section 2. Of course, the first is to maintain monetary and price stability, to issue legal tender. Number 3 says to maintain external reserves. And then number 4 is to ensure the soundness of the financial system. And of course, number 5 is to advise the government and act as banker to the government. But the important one here we are talking about is to maintain the financial soundness of the entire financial system. So, and that is important. And if you take this section alongside with Section 12, subsection 1 of the Bofia Act of 2020, that's the Banks and Other Financial Institutions Act of 2020, it also spells out some conditions that must be met before the central bank can revoke the license of a bank. Now, some of them, the major ones there you find are, number one, when the assets of the bank are insufficient to meet the liabilities. In other words, the bank has now negative share capital. And of course, when the central bank, has reasons to believe that the bank is critically undercapitalized and that the capital adequacy ratio is below the minimum, specified, minimum prudential ratio that is specified. In this instance, it's 10%. And then, of course, when the central bank thinks that the situation of the bank is a threat to financial stability. So if you take all this together, you will now come to agree that the depositors don't have any reason to fear, because what the central bank has done is in their interest. So the central bank has now appointed NDIC, of course, again in line with Section 12, to act as liquidator. And what that section says is that once that appointment has been made, the NDIC will be deemed to have been appointed by the Federal High Court, to now act as a liquidator in line with the CAMA. Okay, so that's what that act says. So the NDIC will now ensure that the depositors of funds in Heritage Bank get their, recover their deposits, at least to the maximum amount insured.
Now, Prof, there's this growing concern, because we've seen this, almost the same thing happen to Sky Bank, which it's somehow, today we are seeing the emergence of Keystone and I think Polaris, I think. The question is, why is the CBN now, why did the CBN decided to allow this particular bank to reach this level of failure before they now act? And then isn't there a willing buyer? A willing buyer?
Yeah, thanks for that question. I have been asked that question a number of times, and my answer is, you see, it depends on the severity of the problem. Okay, we have about 5 different types of bank failure resolution options. Okay, when a bank is failing, of course, the central bank can apply, what is called open bank assistance or financial assistance. Okay, either by way of direct lending or by way of guaranteeing loans made by the bank. Okay, a bank can also receive, as one of the resolution options, technical assistance. In that case, you expect the central bank to change the management of the bank, to ensure that the bank is well run. And there is also the third option, which is the purchase and assumption option, where a healthy bank now comes to buy over, acquire the assets of the bank and assume the liabilities, including the deposits of the bank.
Okay,
and then there is the bridge option.
I'm afraid there's a new development.
The final point I want to make is...
No, we will still continue the conversation.
Okay.
Well, there's a new development. Well, it seems like it's time to hand over to Sokoto for live telecast. Okay. Well, it seems like we should, continue the conversation.
Okay, I should finish my points. Okay, I was talking about the resolution options. You were asking why wait opt-in, and I'm saying that it does appear that the central bank, has tried all the options, and what appears to be the best option now is that liquidation. Because I was talking about the steps, the various options. I talked about financial assistance, I talked about technical assistance, I talked about purchase and assumption. The other option is the bridge back option. Okay, we saw that in the case of, remember, AfriBank later had Mainstream Bank as the bridge bank. Okay, that of course later became was acquired by Sky, and then Sky eventually by Polaris. And we also had the case of a bank PHB. The bridge bank there in that case was the current Keystone Bank, and the case of Spring Bank again metamorphosed into Enterprise Bank, that was also eventually acquired by this same Heritage Bank in 2014. So there's the bridge bank option. Bridge bank is simply a temporary institution or a temporary bank that will manage the assets and liabilities of the bank until a buyer is found. So the last option, okay, which is the extreme form of it, is the liquidation option. All right, and that is usually adopted when the central bank has tried these other options and nothing seems to be working. If you look at that circular released by the central bank, it says there that the Heritage Bank, has no reasonable, reasonable prospects of recovery, to attempt to quote that statement, has no reasonable prospects of recovery. So that will tell you that they have tried everything to resuscitate the bank, okay, but what will appear feasible now is this idea of liquidation. And they also said in that circular that they even prescribed a number of supervisory steps, to the bank in order to salvage the situation. But of course, all of that, didn't work out, which is why the central bank now decided to toe this line of action, which I said earlier on, is in line with public interest.
Now,
so
now the NDIC now steps in to like say, okay, 5 million is the maximum statutory insurance payout.
Yes.
And the rest of depositors' funds after is promised after liquidation.
Yeah.
There are depositors that have, like I've seen one is 17 million on social media.
Yeah, but there are not many.
More or things like that. Yes, because
the
DIC earlier today during briefing said that I think about
98.9%.
More than 90% of the customers have less than 5 million 5 million funds in their accounts. So now the CBN is saying that the banks are sound and resilient and things like that. What's the possibility that this won't happen again?
And now you have, of course, you also saw the recent reaction by the central bank, and I'm happy central bank, promptly responded to the, false rumor that was going around with respect to 3 banks, because as I said, it's important that public trust, public confidence be maintained in our banking sector. So when that rumor was flying around, the central bank, quickly, swung into action and brought out the correct version and said our banks are safe. And how do you know that? How do you confirm that? It's by looking at the prudential ratios, okay, whether in terms of non-performing loans or capital adequacy ratio or even liquidity ratio. If you look at the average for the industry, you'll find that they are all within thresholds, okay? Take non-performing loans, for example. The threshold is 5% maximum. And we understand for our banks today, the average is about 4.6%. If you look at liquidity ratio, threshold is 30% minimum. Our banks all have well over 30%. And for capital adequacy ratio, between 10% and 15%, we also have, this ratio in the average of 13.5%. So the banking system today is stable, is safe, and sound. No doubt about that. So it is important that rumors about the financial sector, the banking sector in particular, we take them with caution, and that's because of the sensitivity of that sector. Look at that rumor yesterday and how it suddenly affected the share price of one of the banks that was mentioned, because the other 2 are not listed, but one of them is a listed company, a listed bank on the exchange, and it affected the share price of that, that bank. So, as I said, I'm happy that the central bank responded to avoid a situation in which people begin to, panic, and then you find us, the banks now experiencing what we call a run. A run on the banks, of course, is something that can destabilize the financial system. And I'm happy that the central bank, by this action, is on top of it. Okay. So what is important is that depositors will get their funds.
Okay, thank you.
Maximum of 5 million naira. And anybody in excess of that will get, later by way of liquidation.
Thank you very much, Professor UCHE UWALEKE.